All right. By the way, I forgot to hit recording, so it's now recording. So it didn't record before. That's the problem with GoToWebinar. If you want to record it, you have to remember to press record, and then I forgot. So, anyways, it's now recording. So obvious low one short. So many buyers wanted to buy below it that it did not trigger. The smart traders put their, they put a limit order maybe one tick above the low of this bar, and they were filled. But again, why did we turn it down right here? You got to ask yourself, if you're wanting to buy above 1105, thinking second entry buy, you know, it's the second failed breakout attempt to this low, I wouldn't do it. The reason is you have the gap right here. This, in my opinion, this did not close the gap. You can argue it did, but I think that's still the same move. This clearly closed the gap. You buy this low, bulls bought more lower, price went one tick above. So if you bought this low at 53.75, price went to 52. Nope, it went 9 ticks below this low, just as I thought. So bulls buy this low, they buy 8 ticks lower, so 2 points, and it went 1 tick below, let them get filled, and they scalped out. So it's a limit order market. It's been a limit order market all day. But, and one thing I want to mention real quick that I forgot, trending trading range days. The key characteristic is you get a breakout and then you start to go sideways. Why is that important? A pullback, a trading range is a pullback that's lost certainty. So, this is a pullback right here. You get a bear breakout, and at this point we're starting to pull back. We're creating a pullback. But at some point, the pullback goes on so long compared to the breakout, like here, that it loses influence. So you get a bull breakout and we're starting to go sideways. Eventually, the pullback's going to last so long that it's really 50-50 on the breakout, and you have to be aware of a trend reversal or an endless pullback. In this case, it's kind of an endless pullback. So back to what I'm saying over here. We went sideways for a long time, and the only way we could do that is if the bulls were willing to buy. So you have to understand, although we broke out of this area down here, we're probably going to come back to it because it's an obvious magnet. That's why trading ranges are magnets. It's similar over here. There's a lot of bulls buying over here. You got to sell off a pullback for quite some time, an hour and a half, basically an hour, and then a bear breakout. Well, because bulls were buying in here, and because there were reasonable things to do, it's reasonable to buy this low, it's reasonable to buy above here, it's reasonable to buy this low. If you manage it correctly, and you buy more above this bar, you will make money. More likely than not, a loss. And one thing I want to mention when I said I'd come back to this bar, look at this sell-off, look at this sell-off, and look at today's sell-off right here. Arguably, these two sell-offs are weak. This sell-off and this sell-off. This sell-off is pretty strong. The reason I say that is, where's the breakout? Arguably, you get a bear breakout, bad follow through a doji, bear breakout, another bear breakout, but it's probably exhaustion. It's the best 2 bars of this entire 2-legged move down, and this bar is a surprise. You had a lot of traders, it trapped a lot of traders, so a lot of bears will get out. Same thing over here. You had a bear breakout, bad follow through, another bear breakout, so trading range price action, bad follow throughs after breakouts. So another bear bar, a smaller bear bar, doji, and doji. So it's getting weaker as it's going down. That's a sign of a trading range. And then this bull breakout, it's a surprise, traders will get out. Anyways, back to over here. We're starting to do the same thing. We're starting to go sideways. A swing bear, if you're short, holding for, betting on just an endless trend, a trend all the way into the close, you're not going to get out above here. Or you may not even get out above this bar. And you probably do, but we're starting to go sideways. So it's kind of creating that final flag, and it's showing traders that, bulls can make money. They're beginning to stabilize the trend. So if a bear did get out here, they're probably not going to get back in below this bar. but you have a low too short, and you may get one more push down, and then it'll rally back into this range. So that's why if you're in the room, Al said this, shorting below 1130 is a scalp. He said it's a scalp because bulls are buying, number one, and they know that, hey, you buy above this bar. If I buy more down here, I'll probably avoid a loss, and maybe I'll make money, especially if I bought this low. Buy these lows, scale them lower, make money. So swing bears get back in here, probably going at least a little lower, maybe at least a little lower, but first time we touched the moving average since, the 8th or the 7th of July. So, basically a whole week. So there's going to be buyers down here. And again, why did this bar close on its low? And it's arguably the best looking bear bar of the entire move down. It's similar to this bar right here. So you got to ask what the follow through looked like, and it's a bull bar closing on its high. So here's that trade I was talking about. You buy this low, you buy more above, or you buy this high, you buy more above. Point is, it's a decent swing buy. It'd be better if you got a micro double bottom, but it's an okay swing buy. Here's basically a micro double bottom, down, up, down, up. So it's an okay swing buy. But again, bad follow through. And this is interesting. This is basically a low one and a low two short. It was such an obvious. The low two short was so obvious that it was probably going to fail. In other words, we were going to get a bull breakout of the bear flag, which this is basically a bear flag right here. This is the bear flag. You had a low one and a low two, and the bulls wanted a breakout above it and a measure move up. So here again, probably exhaustion. So it's probably an exhaustion gap, and we'll probably go above it. So we'll probably get back up to these highs. And as you can see, we're probably all, getting close to always in the long, probably always in the long. Possible, really small measuring gap right here. And no surprise, this one takes you up to here. So we're 60% chance at least we're going to get above here, probably above here. I think maybe 60% chance we get to this low. I'd say more 50-50. This is a decent move down, but if this is a trending trading range day, a bull who buys above this bar and sets a target right here has really good math. And that's another thing. It's important to be aware of trending trading range days because think about the math. You're risking, a point, maybe 2 points, betting that price goes all the way up to here. So the math is really good. So we're rallying up, probably always in long, tight channel, but you still have to question, look at the tails. We get a breakout, bad follow through, big tail, breakout, another breakout, but it's at this high, right when bulls will take profits, it's above the moving average. Bad follow through after we broke out above the moving average, and we're starting to go sideways. So this is important. You can see a lot of bulls who bought this close, really they couldn't buy it. It'd be hard to buy that close. You probably wouldn't get filled. But a lot of traders wanted to sell this close. And whether or not that, it doesn't matter whether or not there were, trap bulls who bought the close or just bears wanting to short for at least a scalp, traders are beginning to sell. And I think more importantly, it's bears selling right here at 53.50, arguably the top of the sell climax or exhaustion gap, and they're trying to scalp out for a point, and you can see they did that. They sold at 53.50 and made 1 point. And then we got another bull breakout, but again, bad follow through. And by the way, if I forgot to mention, a lot of always in bears, I think they have to get out above here. If not, definitely above here. They probably go long, maybe on this close, but they don't have to. A lot of traders will go long here. Low too short, but you're always in long, so reasonable to get out below this bar. And really not a good place to buy until here. You had an attempt to get a bear breakout from the new low or to test all the way back down, and they failed by this bull bar. So excuse me. A lot of bulls will put back on a position right above this bar. But anyways, always in the long, but we're going sideways. You know, then that's okay to hold and put a stop down here, betting we get back to here. But just as I said over here, this is important. We're going sideways. It's causing disappointment. It's causing traders to scalp, and it's telling bears that it's okay to swing, or excuse me, it's okay to short, especially with limit orders above bars. And you can see bad follow through, more bad follow through, a breakout, the big tail, you know, failed to close above these highs, more bad follow through. It's arguably a wedge. First push, second push, third, and we're starting to sell off. But, you know, bear breakout, should get a second leg down. We did. It's this. Full breakout. Very tight channel, and it's hard for bears to make money below bars. So we should get a second leg up. Is this a second leg up? Probably not. We got a deep pullback, and here, you know, arguably, large leg one, leg two. Leg one, pullback, leg two, or a wedge. First push, second push, third. But it's a pretty tight channel, and if you just look, you know, the only way the bears made money was shorting below here and scalping out here. You know, they failed to short below here and make a 1 point scalp. So do you really want to, let me put it this way. I think it's okay to get out of shorts here. It's very aggressive to short below this bar. If I did, once I saw, I'd be hesitant with this. I'd be okay with it, thinking that you have bulls buy this, you know, bought this close, disappointed, scalped out, at break even. Good bear bar for the bears, but it's hesitating. And if I'm taking a short, you've heard I'll say it before, even you've heard him say it. If you're taking a short, that's not a great trade, and it's going sideways where it shouldn't, especially with small bars, you probably need to get out. So you sell here, disappointed, bear bar, but not great, bad follow through. And you know, I get it. It's a bear bar. How is it bad follow through? It's bad follow through because it's a one tick body. You know, the bears need a breakout, and they're not getting it. And then this bar to me sealed the deal. And that is why, the reason I know that, once again, is look at this bar. Look at this open. Look at this close. It's the exact same price. So as soon as traders saw this doji at 14.20, they just bought the market. They did not even try to buy the close because they never got filled. You know, and then getting late in the day, and the next question, you know, we're going to get a bull breakout of, you know, a wedge. Probably not. You know, maybe we'll get that. You know, more likely we're going to get back to this low. Because again, you got traders buy this low, buy more above. And as you can see, that's what we did at the end of the day. But again, full breakout. It's good. It closed above that high, so it's good, but not great follow through, big tail. And again, you know, we closed at this low, not above it. Another tail. And then we had a small little doji after we got back to here. So what does that tell me? That tells me that a lot of traders, some traders were willing to hold once this closed. Excuse me, some traders were willing to hold once this closed at this low. However, traders were willing to, let me put it this way. Traders were willing to hold and see what happened at this low. But once it closed with the big tail and did not close strongly above it, they got out. You know, price went one tick above, and they got out. And, you know, more realistically, you buy this close, you're disappointed by this, and everybody wanted out. So when this bar is going down, it's important to notice that this open is at this close. So that means you have trapped break-even bulls, and it's late in the day, so you always have the risk of this. You know, you buy the close, stop below the low, or if you buy the close, put your stop down here. If you're not careful, you can lose a lot very quickly. So all in all, really, it was a trading range day. You know, followed by a few breakout bars. You had a sell off here, sell off, sell off, sideways, sell off, and then sideways at the end of the day. I'm gonna pick here. I just opened a box for questions. Okay, so ask a question if you'll have any. I think I just opened it. Okay, yeah, it's open. That question box is small. All right, I'll give a few more seconds for questions, and then if there's not any, I'm going to go ahead and end this. All right, so no questions. So I hope this helps. I'm going to plan on doing more of this. Again, it's going to take a little bit of practice, just because there's a lot of. Oh, okay, we're here. Someone has a question. But like I said, it's just kind of tricky. It's very different. A lot of buttons, but yeah, if you can see the question box, go ahead and ask the question. All right, the for all of you in the webinar, Al's webinar, I get why he says keep your questions short, because this box is, oh, I can stretch it out. Okay, this box is small to say the least, but okay, I think I've got it. Oh my gosh. Okay, give me 1 second. I'm gonna stretch this thing out, and hopefully, yeah. I mean, this box is small, but okay. So Al uses the term sideways a lot. Okay, what is your take on what he means by sideways? Yeah, so sideways is trading range basically. And just to keep it simple, he probably said if you're in his room, it's sell to close, disappointment, disappointment. We're probably, and then by here, somewhere here, he said, probably going to go sideways. And the reason for that is he's basically just saying it's probably going to be a trading range, or here, probably sideways or down. So sideways is simply, it's just a trading range. Here's another example. So I said trending trading range day on this day. You get a bear breakout, we're sideways in a trading range, another bear breakout, more sideways. And a lot of times on trending trading range days, you get an obvious breakout below the bottom of a range in this case, and then we just two trading range. You have an upper trading range here, lower trading range here, and then we close the gap and fill in the thin area. Thin area simply means it's a breakout of the two trading ranges. We close the gap and we just start to go sideways in between the range. So somewhere in here, he probably said, probably sideways into the close. So I hope that answers that question. Okay. Do you think the July open is a reliable target for the bears over the next few weeks? Okay, let me just. Oh, well, okay. Let me reread that question. Oh, do you think the July open is a reliable target over the next few weeks? Well, it's fine, July. Yeah, okay. Yeah, so I get what he's saying. Basically, let's just keep it real simple. I mean, the open of July is 89.25. Here's a daily chart. And yeah, I mean, so July the 1st, in the next few weeks, will we test all the way down to here? Well, probably. I mean, you got to ask yourself this: what are the odds? So this is always simple, and this happens a lot, in my opinion. It's always interesting right here. So let's say, how do I put this? Okay, so here's the measured move from the low to this high. So it's a spike, pullback, and we're getting a breakout. So probably a measured move up, possibly a measured move up. We're stalling in between, the target. So a measured move up of this is up here. We're stalling right at 50%. So we do that. That happens often, and the reason for that is just it's what are the odds that we're going to test up to here before we test down to here? And right now, I would not short. I think we will close this gap. I think I do think the bears will make money selling here, but at that same time, this is a breakout. So I would wait for at least more sideways. Do I think? I do think we'll pull back though. So again, here's a 50% pullback here. I think we'll get to this area. So do I think we'll get back to the July open? Yes. But with that said, I think we'll have, I don't think in the next week we're just going to sell off back to the July open. If we do, that would be very surprising. Now, with that said, weekly chart. The bulls see this as a breakout. The bears tried to make a disappointing bar. They got a big tail on top to cause disappointment. The most disappointing thing would be a bear break, next week closing on its low, closing close to July. So, to answer your question, I think we will. I don't think it will happen next week, but I do think we will. But it really depends. It depends on what the bears can accomplish. So if you're a bull and you bought all through here, you're going to take profits and you're going to wait 10 bars, 2 legs. You're going to give the bears a chance to see what they can do. And if the best they can do is a little sideways to down, you're going to buy again for more up. If they reverse it strongly, then the bulls will step aside. But I still think we're going to second look up from this. This is a very tight channel. Okay, and so another question. If you expected a second leg down, would you consider selling on a limit order at the high tail around 10:30? Okay. Oh, okay. I think I see what you're saying. So I believe what it's saying is that, oh, I'm sorry, I'm on the wrong day. This will make more sense. Yeah, yeah. Okay, yeah, absolutely. So always in short, we never really clearly went always in long over here. So probably, we stayed always in short. Clearly back to always in short here. Strong enough breakout that the first reversal up will fail. And you're exactly right. A lot of traders, that's why the bar looks like this. They sold at 55.25 and price went to 55.50 and immediately turned down. So yeah, you're exactly right about that. So yeah, that's a very good thing to do, in my opinion. All right, that's all the time I have, and that's all the questions. So hope everyone enjoyed it. And like I said, I'm gonna start doing more of this. So hope everyone has a good night.